This is Natalie Pace, and today we're going to be talking about stocks because the S&P 500 just hit another all-time high. It is April 15th, 2026. We're also going to talk about the Magnificent Seven because a lot of those companies are actually pulled back from their all-time highs. So is it a good time to buy? And what about gold, silver, crypto, oil prices? Will the war in Iran end? What should you be doing with all of these moving parts? All of this and more. And remember, you can watch it back at youtube.com/Natalie Pace. You can listen to it on Substack and it's free. If you want to make sure that you can join me for an upcoming video conference, email info@nataliepace.com with videocon in the subject line. All right. Okay, so we have a lot to talk about today. I wanted to talk about AI, a little bit about quantum, about the S&P 500 hitting another high, the war in Iran, high oil prices, and all of this stuff. And I think that the most important thing to remember is that if you have an age-appropriate plan and the markets go down, you're not going to be as freaked out as if you're a person that has too much at risk. So that's going to be kind of the magic sweet spot is make sure that your plan is age appropriate. And it helps to do that with another one of our kind of mantras, which is rebalance once, twice, or three times a year. So is now a good time to be rebalancing? Is now a good time to buy into the Magnificent Seven since some of them have pulled back? What about gold, silver, copper? Are they going to continue to perform? So I want to share with you something, and it's not easy for me to send this as as a attachment or anything. So I really want you just to watch it here. Those of you that are listening on Substack, come to youtube.com/Natalie Pace and you can see it here. So basically what I want to say is, first of all, a lot of what I'm going to be covering today is mentioned in the most recent blog, When Superstars Burn Out, featuring the Magnificent Seven. But the other thing I wanted to show you, and this is the chart that I was using when I was writing that blog, and particularly year-to-date returns, as well as the gains and losses from the prior high. So clearly oil prices have gone crazy, right? But are you aware that clean energy is one of the top performers year to date? That Peru is still performing quite well year to date. So is silver, so is gold. So a lot of times people are looking at, oh, well, they'll say, oh, I lost on my silver. Yeah. How many of us are going to sell at an all-time high or buy at an all-time low? And that's where that magic of rebalancing helps us because we don't have to hit it right spot on. We just have to get close, right? Now, if you saw that silver had gone crazy and it was really high, and you quickly mocked up your pie chart and saw you now have three slices because it did triple at one point, then okay, I can sell two slices. If it keeps going up, I still have a slice there, right? So this is where it's kind of educating us on why the power of that rebalancing can be so important to keeping our emotions in check and keeping us on the right side of the trade. But the long and the short of the story of silver is that it's still performing really well. It's just not compared to its all-time high that was hit on January. Like last year, even with the pullback, it's still, more than double where it started. So, the other thing I wanted to show you was the Magnificent Seven. So this is from last week. They're a little bit higher, but they're still pretty down. So you can see that oh, sorry, no, I did do this. So this is current. So Amazon is still slightly under its all-time high, Nvidia slightly under, but if you go down here to Meta, down 16% from its all-time high, Tesla down 21%, Microsoft down 26%. Now, what do you do with that? Well, first thing is you still want to always have large cap growth. And if you're looking at your large cap growth funds, you're going to see that honestly, 60% of the fund is going to be technology, and at least the ones that we've been looking at in our financial freedom retreats, most of that is the Magnificent Seven. But we also have been encouraging an extra slice of Magnificent Seven. So an extra slice of Magnificent Seven could be a fund on iShares like TechB, TECB. If you wanted to focus on artificial intelligence, it could be ARTI. If you wanted to focus on cybersecurity, it could be IHAK, IHAK. So you can get really specific there on that. But again, the important thing here, look, the Magnificent Seven have been superstars for the past 3 years. They've been the fuel on Wall Street, right? So you don't want to just say, buy high because you're at the party and now sell low because you think that Microsoft has gone so far down or it's going to, you just want to take the emotions out of it. What is the strength of these seven companies? And the truth is they are leaders in not just whatever is their main product, like Google is search, Meta is social media, Tesla electric vehicles, but it's not just there. All of them are leading in AI development, as well as most of them are leading even in quantum computing development. So these are companies that not only are leading, the hottest industries happening right now, but they are positioning themselves to continue to do that as quantum starts becoming as exciting as AI. That's still a little bit further down the road, but again, the companies that are cash positive and able to invest literally billions in these, endeavors are the ones that are in the Magnificent Seven. Also, I wanted to show you, and I'll show you again on that chart, is that, the top performers year to date, clean energy, Peru, silver, and gold. Now, a lot of people are saying, okay, well, what is the case for copper? And I have talked about this because I just had a blog on hot countries and also a video conference on it, is that look, high oil prices are highly correlated with recessions. Nobody wants that. I know that we're not all clear on why we went to war with Iran, or we might be clear. I'm not sure about that, but I know one thing. Nobody wants $95 a barrel oil. Everybody, every world leader knows that this leads the world into a recession. So the thing about it is that we want to make sure that our plan right now is age appropriate, properly diversified. And at the same time, we need to understand that there is a possibility the war can continue. There is a lot of pressure for them to try to end it. If they end the war soon, or, soon, right? Then you will see euphoria on Wall Street. It might be short-lived, but you can definitely see, like even today, the war isn't over, but they are reopening talks. And so you saw the S&P go to another all-time high. So you will see euphoria. But the longer we have these high oil prices, the worse impact that it could have. And the longer we have high oil prices, even if the war ends, it could take a little while for the oil prices to go back down. Now, they could and probably will eventually go back down to that $60, $70 range, which we've all gotten used to, which is still kind of high. But it could take a while because of the global nature, not just of oil, drilling, but refining and then turning it into petrochemicals and turning it into plastics and all the other things they make out of oil other than just the gasoline that you put in your car. So the bottom line is a shorter war for Iran. We may actually be able to get that 2.3% GDP growth that everybody is expecting and wanting in the United States. But if the longer that the oil prices remain elevated, we risk a recession. The other thing about the macro here is that this is a midterm year, and midterm years have not been doing well. So you might recall that in 2022, the S&P 500 lost almost 20%. Tesla, 67%. Bitcoin, 67%. Many of the Magnificent Seven companies, including NVIDIA, down by half. So it's really important to always capture gains and make sure that it's age appropriate, properly diversified. We're actually overweighting 20% safe. It's not just the war in Iran. We were doing that before that. And it has a lot to do with elevated equity prices and way too much debt. And 2.3% it's impressive. And it honestly is highly tied with AI because we're leaders in AI, but also the productivity gains that we're getting from AI. So, yeah, I just would say that if you have not rebalanced your plan recently, now is the time to do so. In terms of HOTS, and again, I just did a blog on it. I've been talking about it a lot too. We still have as our HOTS. I'll talk about crypto in just a moment because we have had crypto as a hot previously. But we still have as HOTS, definitely Magnificent Seven, definitely cybersecurity, which I think actually no company can cut their cybersecurity budget. I think that actually adds a layer of buoyancy too. We also are still very interested in our value replacements. And I just did that blog. So our value replacement companies continue to be Australia, Indonesia, which is actually priced low right now. So if you are dollar cost averaging into that one, you might take a shorter period because you're buying low. Peru, which is trading very high. So if you're just now getting to that game, dollar cost average and take a while in case the markets pull down Peru and Ireland. So Australia, Indonesia, Ireland, and Peru. And we are also having a hot slice of silver rather than gold. Silver has been smashing it in terms of gains over gold, especially last year. And you could think about other things too. We've had medical devices in the past, which performed a lot better than biotechnology. So again, we really study what's going to be hot and why it's going to be hot on day two of our financial freedom retreats. On day one, we talk about a properly diversified plan, age appropriate, and how you have to make sure every year you get a year older. So you got to make sure that it's age appropriate by rebalancing it once, twice, or three times a year. And then day three, and again, I know I keep looking at my crypto note, and we'll talk about crypto in a second. Day three is what's safe. And I think that's the key that really people need to understand as well. As you know, I'm a financial educator. I do not manage people's money, but when I do my second opinions, I'm seeing a lot of people who are being sold into very sketchy, safe products that immediately lose money and become illiquid the minute they own them. And then, of course, they say, oh, well, it's a paper loss and just hold it to term. But I don't know if you've heard about this, but Google just did a century bond, right? Are you going to be alive in 100 years? So a lot of these more risky things that have the paper losses are actually long term or very low credit quality. So we have a mantra, which I'm happy to share with you, keep the terms short and keep the credit quality high. Now, doing that is tricky because some things that I actually would not consider credit worthy have a good credit rating. And so when you attend with us on day two, you can see that in the stock report card, why I'm saying certain things about this company, even though it has a double A or even a triple A in some cases, why by my standards is still not credit worthy. So it is getting a little tricky because of the amount of debt. You hear about the public debt. You don't hear about the total debt and loans, which is over $110 trillion right now. So there is a lot of debt. There's a lot of leverage, and that makes the safe side tricky. It doesn't make it impossible or difficult, tricky, right? So once you learn these tricks that we teach you on day three, it's going to be super easy. So I will talk a little bit about crypto. As we told you in my blog, and I've been repeating it again. So in 2024, we named Bitcoin as our investment of the year. It did very, very well in 2024 and most of 2025. In the Bitcoin Investor of the Year blog, investment of the year, I also warned about that we could hit a crypto winter by 2026. So I was really encouraging people to take their profits in Bitcoin in 2025. Now, there are two things, even though I know everybody's been waiting for the legislation to cycle through Congress and that everybody's going to go crypto crazy then. There are two things that play against that. And one is this halving trend. And that would mean if the halving trend holds true, and it's been holding true through the halving events, then we do have a 2026 crypto winter that doesn't end until 2027, maybe even late. The other thing is, again, if the oil prices remain elevated and we have a correction or a bear market, usually that drags down crypto. Bitcoin is highly correlated with stocks. So in 2022, when we saw the S&P 500 drop by 19.44%, Bitcoin actually dropped by 67%. So that's just important to know, right? Like if you are going to want to buy into any sort of crypto, first of all, dollar cost averaging is a good idea. It's probably not at its low if all of these other trends we talk about come to pass. But dollar cost averaging helps to smooth that out, but it's still much lower than it was, right? So you can see that again off that chart that I was showing you. It's at the bottom here, and it's down 41.2% from its all-time high, which was in October of last year. The last tip I want to give you about crypto, and I'm also going to include the HOTS, is that most of us are going to have multiple accounts. So you might have a 401k at an employer, and you're not able to put gold or silver or crypto in it, not Peru either, right? And you might also, and I encourage you to, have a Roth IRA. You might not qualify for a Roth. You might qualify for a SEP IRA or a traditional IRA, but start maxing those out every single year. And that's where your HOTS go. And today's world, you can do a Bitcoin or an Ethereum ETF. iShares offers both. And the beauty of that is no capital gains. So when you have, that's why I put my HOTS in my Roth. When it shoots the moon, if I capture my gains, I don't have the capital gains taxes. So I think that a lot of, this just wasn't available a couple of years ago. You couldn't actually buy any of these ETFs in your retirement account. You can now. A lot of people have been waiting for that legislation, but you can buy it now. And in credit-worthy fund companies like iShares. So I think that's about it for right now. I hope that I covered everything I said I was going to cover. I guess the bottom line is rebalance, always keep an age appropriate plan in place. And we are overweighting safe, and there are many reasons for that. All right, I'm going to stop it here and see if anybody has a question, and then I'll circle back with you. Okay, so again, thank you so much for joining me today. I want to remind you that it is a good idea for you to read the blog. You're going to be able to easily access the link to this blog, When Superstars Burn Out, featuring the Magnificent Seven. I'm going to have that available in the description on the YouTube channel for this video conference. I also want to invite you. We do these financial freedom retreats 4 times a year. The next one is April 24th through the 26th. It will change your life. It's the life math we all should have received in high school. So email info@nataliepace.com if you have questions or if you would like to register. You can also learn more at nataliepace.com. Just once you go there, you'll see it right at the top of the page, and you can learn more about the hours. Again, it's online, so you can attend in your pajamas if you want. And, there's the hours 8 to 4 Pacific, 11 to 7 Eastern. There's pricing information. There's also the 15 things you're going to learn, and there's a lot of testimonials as well. Now, if you are someone who has attended at least one retreat, or if you're someone who's a very experienced trader, we are hosting a stock master class on next Saturday. It's this Saturday. It's on the 18th, just a few days away. So if you would like, again, you're going to be underwater if you try to attend this before you attended a retreat, like I said, if you really are an experienced trader, then you should be fine. But it's a very good idea to attend a retreat first so that you learn about our stock report cards and the 4 questions and all the things that we do on day 2. All right, so again, you can email us, info@nataliepace.com. You can call us at 310-430-2397. And I hope to see you online this Saturday for the Stock Master class, next Saturday for the Financial Freedom Retreat. One last thing, I do want to invite you to join us for our Earth Gratitude Challenge. So how many of us would like to lead? We want to make sure the rainforests are okay. We want to make sure the elephants are okay. We want to clean up the oceans. We want to breathe clean air. But how many of us are aware how much power lies in the power of the individual? Because if we don't buy it, they can't sell it. So we have 21 leaders and leading organizations giving us tips. They're enlightening us, they're informing us, they're inspiring us, and we're all going to be celebrating together and changing our lives together in the Earth Gratitude Challenge. It's easy to access it. Go to earthgratitude.org/2026 and join us for this challenge. You're going to get a challenge a day. It starts when you register. Your first day will start when you register. So here's earthgratitude.org. You can join it by just clicking there. Join us for the 21-day challenge, or earthgratitude.org/2026. Here are some of the contributors. So you see some celebrities, a Queen. Paula Kahumbo is a Nat Geo 33 leader. Dr. Jane Goodall contributed, the Dalai Lama, Ed Begley Jr. And again, these are all practical challenges and tips that not only will get us green, but will save a lot of green in our budgets as well. Some of these tips could even save us thousands of dollars every year. So thank you for joining me. Join me in the challenge, and I hope to see you online this Saturday for the Stock Master class and the following weekend for our spring financial freedom retreat.